what's going on with Adobe? Is it a value trap, a value play, a no-brainer? The last year, stock is down 30%. Year to date, we're down around 10.5%, so we're back under $400, a market cap of $171.6 billion. So what's going on with the company? What went wrong in the last earnings report for the stock to come back down yet again? Despite guidance being reiterated, are we back to the same thing that happened last year? Let's discuss that in this video. If you enjoy this type of videos, hit all the buttons. We really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So Adobe at the moment has an average analyst price target that sits 35% higher than the price we're at today, and that's with the effect of the last earnings report. If we look at what's expected for the coming fiscal years, more specifically free cash flow growth for fiscal 25, free cash flow is expected to grow 17.9%, then another around 10% or so in fiscal 26, and then just 6.8% in fiscal 2027, while revenue growth for the forward 2 years is around 10% or so. Now looking at a couple of things here from their business. So if we look at digital media annualized recurring revenue, the growth rates have decelerated already since the December quarter of 2023. But last quarter, we did see a small reacceleration from 12.3 to 12.6%. Not much, but at least I guess it's better to see it trending up than trending down. If we go and look at the forward PE real quick, I should have done it before, but okay, we'll do it now nevertheless. We can see it's much cheaper today than the 5-year average. 5-year average, of course, includes that huge, I would say, bubble period back in 2021, 2022 or so, but we're now back under 20. Looking at some other metrics here, price to free cash flow, price to sales, EV to EBITDA, same thing here, much lower than the 5-year average. So yeah, you could say the company is now cheaper than before, but maybe it's also less strong than before. Maybe there are more uncertainties around Adobe today than there were before because of all of these AI applications, image generators, video generated, text to video, and all of that. Then maybe this does not deserve a premium anymore, which is also basically one of the main reasons why the stock got hit, right? Because we don't know how they're going to monetize the new AI applications, Firefly, Document, and all of that. We don't know. Plus, there are also some uncertainties around whether or not maybe, OpenAI or Grok or Midjourney or all the other AI applications out there, image generators, you name it, might take some market share or some users away from Adobe. Yeah, some uncertainty. We'll discuss a little bit more about that. Now, in the meantime, we can see that shares outstanding since a long time ago, but since 2017, have gone down at a compound annual growth rate of just 1.6%. That's basically 11.25% as a whole. So yeah, they continue to buy back shares, so that's great. The business still continues to grow, right, since the December quarter of 2021. If we look at digital media revenue, digital experience revenue, that still grows around 11% or so at a compound annual growth rate. Publishing and advertising, which is the smallest part right here, did go down, but then again, it's very small. If we look at the other things, so revenue, free cash flow margin, gross profit margin is around the same level as it has been before, right? So very good. Free cash flow margin, that's usually we stayed around 41 to 44% or so. There was a period where we went back down. So a period where also they had to pay that fine for that Figma acquisition. And now we have been making our way back up. Last quarter, 41.7%, very good. So all in all, the business is still doing fine, right? Despite all the negative headlines out there, business is still doing fine. Now, they did show us a couple of things in the last earnings report. One is basically Adobe as a whole. So they say here, Adobe's success for the next decade will be driven by customer-focused innovation. So they talk here about the customers, which type of customers, business professionals, creative professionals and creators, marketing professionals, routes to market through web and mobile, adobe.com, SMB and teams, enterprises, and then the offerings. So of course, there is the usual ones. They've added also the newer ones, which is Express. You also have Firefly, the app, Gen Studio, if you're looking for more AI exposure. So there's definitely more solutions today than ever before. And that's an important part, right? They look at desktop, web, mobile, AI, and agents, different categories, how they can grow, where are they growing, where's the focus, and all of that. So all of that is great because, in my opinion, the biggest threat to Adobe is not necessarily going to be the competition. It's going to be Adobe itself. It's going to be Adobe a slow grower, a slow innovator. Because if Adobe can make sure that whatever the others are putting out can be found already in the suite of products that Adobe offers its customers, its subscribers, there will be little reason for someone to leave the Adobe ecosystem. So more specifically, they already give us a number from the AI products, let's say. So they said the following: our generative AI innovation is infused across the breadth of our product, and its impact is influencing billions of ARR across acquisition, retention, and value expansion as customers benefit from these new capabilities. This strength is also reflected in our AI first standalone and add-on products such as Acrobat AI Assistant, Firefly app, and services, and Gen Studio for performance marketing, which have already contributed greater than $125 million book of business exiting Q1 fiscal year 2025, and they expect this AI book of business to double by the end of fiscal year 2025. Now, of course, as a whole, it's not a big number, but the fact that they are quite comfortable by reporting that number and saying, look, it's a small one, but it's expected to double, we're growing that rapidly, means that, look, we know what we have to do. This is what we have today. We're not hiding behind any number. This is the number. We know it's small, but it's expected to double, and we feel quite comfortable about it. Now, as I said, the biggest threat for Adobe is not having all of the options inside the Adobe ecosystem. So, okay, cool. Text to video. Cool application. Do we have that with Adobe? Yes. Firefly, image generator. Do we have that? Yes. Because it's true, a subscription with Adobe is not the cheapest one out there. You can probably find, every other LLM out there is an image generator. Now, are they always great? No. So you probably want to edit them, correct? If you want to edit them, where do you go? Probably to an Adobe Photoshop or whatnot. So if you can just stay in that ecosystem, it's just much easier, right? You generate an image, you want to edit, you're already on the platform to edit. Same with videos. Not only that, for enterprises, businesses, marketing folks, it is extremely important that if you create a campaign that's basically being generated by artificial intelligence, it's extremely important that all of those things are licensed, that you can legally use them for your marketing purposes, right? Because a thing that's generated from Sora or Grok or Midjourney or whatnot, I'm not sure it's always licensed and you can use it freely. And so with Adobe, this is basically what you get, a full suite of product and services. So again, threat to Adobe is, in my opinion, Adobe itself. Now, if we do a quick reverse DCF here, we plug in the trailing 12 months free cash flow, terminal growth rate, which to me is just the risk-free rate at the moment. Discount rate is the implied risk premium plus the terminal growth rate. We can see that currently to justify today's price, well, it has to grow free cash flow just 4.2% each year for the next 10 years. Now, we've seen that it's expected to grow free cash flow, especially in the next couple of years, much faster than that. So I'm not going to put it at 10%, but if we put it, let's say, at 8% or so, then this shows us that the price should be 35% higher than where we're at today, which is basically where the average analyst price target sits at right now. But if you want to be conservative and you say 6%, still, that's 15% upside from the price we're at right now, which, to be honest, is feasible. Now, if we quickly look at the stock itself, we are a bit in no man's land. I would say RSI is not oversold. We did a video about the trade desk here. RSI is not oversold. Yes, previously, back in January, we did see the stock go and drop to around $400 or so. It did rebound quite rapidly. Right now, let's see what happens. Of course, on Friday, we've seen a lot of buying action. Maybe 380 was the bottom. Remains to be seen. But if we focus on the moving averages, the 200-day one sits at 486, the 50-day one at 450, and the 20-day one super close to that at $445. So, Adobe, value play, value trap, no-brainer. I don't think it's a no-brainer anymore. I think it's a very solid business, that will probably outperform if they execute correctly. I know there is an Adobe Summit happening in the next couple of days, maybe a week. So there I'd probably focus and see, okay, what are you working on? What's going on? What are you working on? Are some exciting things going to be announced? And then probably make my decision. Because unlike many others, I just don't think that Adobe is going away anytime soon. So you might say, okay, then clearly this is a value play. Yeah, maybe, but definitely not a no-brainer in my opinion. So let me know what you think down in the comment section below. Buyer, holder, seller, let me know down in the comments. If you enjoy this type of videos, hit all the buttons, would really appreciate that. And I'll see you all in the next one. Bye-bye.